Welcome back to Alpha Recap. The market day had wrapped, and we're here to unpack the biggest moves and themes. As always, if you have questions, you can reach us at stockalpha.ai. Markets closed mixed today, and there was a lot to sift through. Biotech shock, a big private valuation in space, and platform-scale stories driving headlines. Ben, thanks for joining.
Thanks for having me. Lots to get into. We saw a near 50% collapse in one biotech after a phase 3 miss, a fresh private market benchmark for space at about $85.7 billion, and an M&A rumor in streaming that shook up a handful of names. So, what really stands out here is how event-driven the day felt.
Let's start with the biotech shock. Walk us through what happened and why it mattered beyond the headline drop.
Neumora reported a failed phase 3 readout for its coastal study, and the stock plunged nearly 50% on heavy volume. Then, a shareholder law firm, Levi and Korsinski, opened an investigation into officers and directors, which layered legal and governance risk onto the clinical setback. Analysts cut price targets. One street note moved the target down to $7, although H.C. Wainwright kept a buy rating. The core point is, clinical readouts remain the single biggest catalyst in biopharma. But when a science outcome triggers a shareholder probe, the issue shifts from short-term efficacy questions to a legal and disclosure timeline that can drag on for quarters.
Wow, nearly 50%.
Yeah, that tracks. And to add to that, we also saw a securities class action notice in enterprise software. Commvault had a notice filed. So today wasn't just biotech. The broader pattern was more legal and regulatory noise across sectors. I mean, when you step back and look at this, investors should recheck contingent liabilities and the legal docket when they model downside scenarios. Watch for company press releases, SEC filings, law firm notices, and any trial data packs or subgroup analyses that companies publish.
Okay, moving up a layer now to aerospace and defense. SpaceX's private valuation grabbed headlines. Tell us what that does to public names, especially with an aviation incident in the same news cycle.
SpaceX landed a private market valuation at about $85.7 billion, which is a pretty meaningful benchmark for the whole space, defense, and satellite complex. Private valuations like that can create re-rating pressure for suppliers and satellite operators. If the private company is priced like a large cap, comps get adjusted. At the same time, reports of a B-52 crash reintroduced near-term event risk to aviation and defense contractors. Right. And the other thing is these two forces work in opposite directions. One signals higher long-term optionality for space, the other raises short-term risk premiums for aerospace contractors. Keep an eye out for any IPO filing timelines from SpaceX, supplier commentary, and the FAA or Department of Defense updates on the accident investigation.
That valuation feels significant.
Honestly, I was a bit surprised by the timing. And speaking of timing, M&A chatter in streaming, reports of a roughly $22 billion Fox deal moved the market. Roku spiked on the rumor while sell-side desks, including big banks, quickly adjusted ratings and commentary. That kind of deal talk can create speculative runs in beneficiaries and force brokerages to reprice expectations rapidly.
Let's pivot to the platform and scale theme. Meta's Threads hit a milestone, and there were a couple of other scale and integration stories. What were the key numbers and why do they matter?
Meta said Threads reached 500 million monthly users. That's a scale milestone. User count alone doesn't equal revenue, but hitting that scale widens monetization optionality. Ad formats, RPMs, and ad targeting start to look more credible over a multi-year horizon. GreenCore signed an LOI to form an Asia-Pacific joint venture after reporting about 9.11 million agent requests in a 30-day window, with APAC representing about 14.4% of flow, a sign the user base is shifting regionally. On the enterprise side, OptiSigns launched unified device management for meeting rooms, tying together Zoom, Teams, WebEx, and Google Meet. And BlueIp rolled out a guest engagement product for for a major hotel operator on Oracle Hospitality Opera Cloud. Those moves are all about scale plus integration. When user engagement, geographic reach, and product integrations align, monetization becomes more realistic. Watch ad RPMs and ARPU, any APAC revenue disclosures from platform names, and enterprise rollout notes tying adoption to SaaS revenue.
So scale plus integration equals optionality.
Exactly. And circling back to risk, platform wins can be multi-quarter stories, while legal or trial headlines can flip sentiment overnight.
Quick reaction segment. Let's cover hospitality and credit. Any notable items there?
Enbridge and its pipeline unit completed an exchange of medium-term notes, which matters for credit models and leverage calculations. A hotel guest engagement rollout using Oracle's Opera Cloud highlights tech-driven experience upgrades that can incrementally affect occupancy and RevPAR over time. Disney Springs Resort Area Hotels extended a $99 special rate through July 30th, a tactical demand play for the summer. And Ariel Bank appointed a new head for North America, signaling a push into US hospitality lending. These are mostly incremental, but they can change cash flow timing for REITs and lenders exposed to hospitality credit.
Turn to market micro moves and liquidity.
Crypto-linked flows were active. The ProShares Bitcoin Strategy ETF jumped about 4.5% on heavy volume, roughly 210 million shares traded. A small cap inverse leveraged fund slipped about 2% on heavy activity, underscoring rotation between risk-on and defensive positioning. We also saw a penny stock trade over 700 million shares at about 1 cent, clearly a liquidity story more than fundamentals. Tesla saw intraday resistance around $417 to $420, with traders watching around $405 support and $420 hourly closes for bias clues. Pattern-wise, liquidity is compressing into thematic ETFs and high-volume names, which can amplify intraday swings.
Liquidity chasing narratives. Got it.
Right. And beyond those moves, a few other notable items popped up. A division of a major HVAC maker was fined $8.5 million by the Consumer Product Safety Commission for delayed safety reporting. That's a regulatory enforcement data point that can feed compliance cost assumptions. An industrial deal closed where Bull Moose acquired Hanna Steel, and an advisory role was announced. And at the community level, we saw an EV safety training event sponsored locally. Small signals that point to broader operational needs.
Before we wrap, what should listeners watch for when markets open again?
Tomorrow, watch for Neumora follow-ups, company releases, SEC filings, and law firm court notices from Levi and Korsinski. Any SpaceX IPO signals or formal S1 talk would be market-moving. Expect updates from Boeing, FAA, and defense investigators on the reported B-52 incident. Look for filings and definitive agreements around the reported Fox transaction that moved Roku, plus brokerage notes that clarify price benchmarks. From platform names, any comment on ad RPMs, engagement, or guidance linking Threads' scale to revenue assumptions. For Enbridge, rating agency commentary and updated debt metrics after the note exchange. And finally, monitor whether crypto ETF and leveraged ETF volume sustains. Momentum can be self-reinforcing.
Give us the final takeaways in bite-sized form and a quick investment disclaimer note we can read to listeners.
Key takeaways. 1. Neumora's Phase 3 miss was the day's biggest single stock shock, and the shareholder probe extended the timeline and uncertainty. 2. SpaceX at about $85.7 billion set a fresh benchmark for space-related assets, while a concurrent aviation incident raised event risk for aerospace contractors. 3. Platform scale and integrations. Think Threads' 500 million monthly users, GreenCore's APAC traction, and enterprise integrations from OptiSigns and BlueWhip remain the structural stories for potential monetization. 4. Legal and regulatory headlines are rising across sectors, meaning contingent liabilities and disclosure timing should be part of modeling. 5. Liquidity concentrated in thematic ETFs and high-volume names can amplify short-term moves. Analysts note the data suggests elevated event-driven volatility. This is informational only. We are not recommending buying or selling securities. Consult primary filings and your advisors for any decisions.
Thanks, Ben. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for tuning in to Alpha Recap. We'll be back after the next close to walk through the moves. Take care.